Dividend growth in South Africa's equity market has overtaken earnings growth for the first time in 30 years. CNBC Africa's Paula Gilbert earlier spoke to Old Mutual Equities strategist Graham Bell about what this means for the local economy as well as what is happening beyond our borders.
Well, no. I suppose it's a reflection of, companies being prepared to distribute dividends at the moment because they're a little bit uncertain, unsure, unprepared to be investing their cash into new projects, into new investment ideas. So that's a function of uncertainty both here, and we're seeing it in other economies as well. Companies are sitting on a lot of cash flows are strong, and we've had a pretty tough period the last 5 years, both here and globally, following the credit crunch. There's been a lot of volatility, a lot of worries, there's a lot of skepticism still that global economy, South African economy has upside potential. But one of the points that I made in our presentation today was that if you look at, for instance, Eurozone car sales, they're now at 22, 23-year lows. Consumer spending has continued to pick up, but car sales are way, way down. And what happens when people don't buy cars is that their cars get old, and new models come out, and new environmental standards start putting pressure on you and so on. So people have pent-up demand, and there are pressures to replace cars and to replace the aging fleet. And I think that's a process that can unwind positively for several years, as we saw with the US housing market, for instance. And Eurozone is an important trading partner for South Africa. So if Europe moves from what's been a very tough headwind into a tailwind that gradually gathers steam, that's a pretty positive underpin for South Africa.
You were saying you think there's going to be extended recovery?
I think there's a potential for an extended recovery. It's already started in the US, it's well underway. It's just probably starting to get going in Eurozone. And Japan, the latest numbers in Japan also show that the little uptick that we saw last year is probably not going to be short-lived. It's probably going to carry on for some time. And they're really determined in Japan to push that economy forward.
Now, SA companies holding onto their cash and not reinvesting in the economy, is this showing a lack of confidence?
It is. It's obviously partly reflects the slowdown in the economy. So it's a real factor there that they can see consumers slowing down, consumers under pressure. But there's a political economy as well. And since Marikana and before, and all the ramifications post Marikana and all the other labor issues that we've had to experience in multiple industries in this country, they put pressure on companies. It creates doubts in their minds as to the future and where they should